everybody. Welcome back to Freedom Algo. Hope you're all having an amazing day. Hope you're having a great week. Alright, let me zoom out real quick. I'll wait for everybody to hop in. I'm a few minutes late. I try to get here on time, but I just got back because I had to take the kids to school, so that's just the way it goes. So I'm taking a look here. I haven't charted this section out yet, so it looks almost like we're getting some sort of a channel that looks like this. It's kind of an awkward one, but it looks like we might have a new up channel that started. We didn't quite... Oops. Hold on, let me fix that. We didn't quite make it to the lows. I think we missed it by like a couple of ticks. We'll measure it here. It looks like 67, 69, and this one is 67, 68, 50. So we didn't quite get the low. We got close. All right. Anyway, welcome everybody. Welcome. Hope all is well. If you're here, smash up the likes. Definitely subscribe to the channel. And I'm going to zoom out here. Hang on one second. Let me look at something. All right, I have to check something real quick. Bear with me just a moment while I look at something. All right, I'm back. Back. There we go. All right, so this is what the day looked like. This morning, it was a range. And here, let me actually draw this line on. I'll zoom in a minute. Don't worry. I know it looks probably tiny. I'll zoom in here. But I want to zoom out first and just show you the big picture. All right, so the big picture is we had a range. We formed a downtrend and we broke through the range. Then we got to close outside of the downtrend, move to a new low, and it formed a new trend. And it's all part of this, I think, this one big channel that all went down. It's basically two different channels, two different smaller channels, like two big legs within a bigger channel. Then we get a close outside here, move to a new high, reversal to try to make a new low. It fails. After this little overshoot, it fails. And now it's reversing back the other way. So it's kind of like its own range down here. It's not quite the most convincing range, but you could basically argue that there's sort of a range, like a separate range in here. And the measured move is basically where the midline of that range would be. So this was originally a measured move down here of this range. So let's zoom in and we'll go over it. This was a little bit of an easier day, I think, because once you had the downtrend, you pretty much knew what to do. However, there's a couple of tricky spots, so I'll make sure to talk about those. All right. So this morning when I came in, the chart kind of looked sort of like this. This wasn't here yet, but basically we had this little downtrend, uptrend, and it was just kind of sideways action. This is an all-time high right here. So we were at the all-time high in the overnight. Hadn't quite made it. During the regular session after the open, this is where we topped out. Pretty close to the all-time high. So basically when I came in, we had this like little channel, kind of a weak up channel here. I think I got here right around this time, like 5:30-ish. Like I think it was this green bar is where I was when I came in. And so you can kind of see there's a first entry long there. There's kind of an inside bar that creates a second entry. There's no setup in there. And it's, you know, there is a second entry short failure right here. So a failed second entry short above this bar, but there's an inside bar there. So just not great. Anyway, and it's not really where you're looking for one. You're in the middle of a range anyway. So it comes up, you get a close outside, new high right here. This makes an equal high and pulls back a bit and then gives you one more leg up. So this trade right here, from this low, it's basically like two legs to a new high. It's also a failed breakout of this blue line where we kept rejecting. It was kind of like a micro range. It's risky, but you're so far away from the EMA in that area, you're probably going to get a pullback. What would have been better here is if we got like a nice lower high, like up here somewhere, that you could ride it back with, but you just don't get it. So that one's a risky trade, but I think it is reasonable. It's only a 7-tick bar. And if you got that one, you got a runner, so that's a nice one. Then after that, it comes down and gives us this move here, which basically, this is actually a hidden second entry short. That's a little more advanced, but it is one. It's not one that you want to take, though, because you're shorting right into this area that you might bounce from, so it's dangerous. Now, when it just completely dumps through like that, I'm thinking, okay, we already had a new low right here, and then this one makes another new low all the way down to here. There is a first entry, second entry long failure right here, but you don't want to short those lows. That was originally my range low. You don't want to short right into the range low. Now, when it breaks through, comes back, and then breaks through, I moved my range lows down to this level right here, which is the overnight low. So I'll delete this blue line now. And so I looked at it as a new range low here, because this didn't look like a failed breakout back in. So I was thinking, okay, maybe that's the range low. And so then when we get this uptrend here, and we get a new high close outside, and then we get a second entry short, this is the trade of the day right here. If you got this one, that's the best trade of the day. It's pretty much exactly what you want. Because what it is that we have now this... here, let me try to see. This right here is a high. This is a swing, and this is a swing. So this is our third swing to confirm the downtrend, and then we get a lower high. It's right off the EMA. You know, the first entry is really nice, and then the second entry is basically a perfect signal bar. You had to be so fast to get into this. Basically, as soon as I dropped the order, the thing went bang and just took off. It was amazing. Those are the best types of trades, and this is why stop orders are the way that I enter trades. I enter one tick below the bar, because if you don't, right, you miss this trade. Because as soon as this bar closes, you have to drop the order right away. And then this next bar opens and goes boom and just dumps straight through. If you dropped a limit order back here somewhere, you would have never gotten filled and you would have watched that thing go without you. So, and you have room to the lows. So the way I looked at this was scalp and run. So once you scalped, your stop loss is now here. And then what I did was move the stop a little bit and just let it run. And then that was a nice little runner. Pretty good one. Pretty good one. I didn't run this thing too far. I was out in this area here. Just because that bar was so big that I'm like, oh, we might get some sort of bounce back to the area. So I could have gotten a lot more out of that, but I ended up still having some nice movement. So then it comes down, and then you get a first entry. There's actually a second entry short on this bar because this is like an equal high. I don't love those, though. I don't really love those. Like, I really looked at this all like one first entry. If this broke one tick higher and then reversed, it would have been nice, but then the bar is too big and you don't have room to the low. What I really would have liked here is this to tick up higher and then this bar to close like maybe like over here somewhere, give you some better room. Entering all the way down here is just not my favorite, especially on a bar like that. What is that, a 16 tick bar? So you have an 18 tick stop loss if you take that trade. It's just not ideal. All right, so then it comes down. Now it comes up and breaks out of this little trend. So when it broke out of this trend here, you actually get a first entry short, and then you get a second entry short, and this means that this uptrend is played out. I marked it yellow because it's above the EMA. It's an equal high to the bullish bar, so it's almost like an inside bar. I really wanted this to kind of come down, tap the EMA, come back up, give me a lower high that closes below the EMA, and then I would have liked it more to ride it to the lows. It didn't set up like that. So I didn't love that. And then we get a really nice one here. We get a triple test. Oh, let me talk about this too. There is a lower high here, but the reason that you don't want to take a lower high here is, I've talked about this before. If you're taking a second entry short, right, and it's already moved 3 points and then gives you a lower high, you pretty much have already missed the move. Like we are expecting a new low, but look where it is, right? It just bounced there twice, this level. So you're basically shorting right into an area that we just rejected both times. it's kind of dangerous. In a way, this double bottom here pretty much resets the count, right? That's a double bottom. So this is actually like a first entry short right here. And that's why this one is better, where you actually would look at this kind of like a second entry short and triple test. Unfortunately, not a good signal bar. So keep that stuff in mind. You got to be aware of these things because otherwise they can get dangerous on you. You don't want to just take every lower high after a second entry. You got to be aware of how far it's moved and all that sort of stuff. Now, sometimes it's still reasonable to take it even if it has moved far, and I'll talk about that. This was a close outside of the channel, and we are expecting a new low, but it doesn't always happen right away. If it's a lower high within a channel that's off the key entry point, that's even a little bit different. So I'll talk about that in a second. So triple test here, unfortunately not a good signal bar. It does run down, but that is nice. Then you get a lower high here off of this possible key entry point of the bigger trend. But at the time, I was just thinking, that's just basically just a lower high. There's nothing there. First entry short, no real trade. So now, listen, this is where it gets interesting. I didn't really think we had this big channel at first. I was looking at this originally as just this one channel down with a close outside here and then a move to a new low. So when it made this move to a new low right here, and so we basically get this move down, close outside, and new low, I looked at this as a second entry long. You have this high here, and you have a pullback, first entry, pullback, second entry long. Dangerous to pick the bottom, but it is a new low made here. So when you get the higher low, that's the better setup, and it finishes bullish enough. It's not perfect. It's not a perfect signal bar, but that is what you want to see because you do want the higher low here. So basically that shows you that we probably have a reversal because you've got the close outside of the channel, and it's basically two legs to a new low. They're probably even measured, to be honest. I don't know. I mean, pretty much like one or two ticks further. Basically two legs to a new low and then a higher low. Like that's what you want after a close outside of a trend channel. So, I mean, you could even argue that it's actually one. This is really, it's almost three legs. So it's probably played out there. Now, so I thought this was a safe long. And I did take that one. I think I got a screenshot of that one. Right? Did I get a screenshot of that one? Let me see. I think I did. Let me look. Pretty sure I did. This is in the paid community where I post the chart updates. Oh, yeah, here it was. So I showed that one. Yeah, there it is. You can see I had two contracts as a runner. I already had scalped out. I ended up not getting a runner, though. So it ends up just... I was trying to see if maybe we were going to reverse and come all the way up here. But it just didn't happen. Because what ended up happening instead was we formed a new downtrend. So I didn't draw this channel until this rejected here. Now, once this rejected and we had a touch there, touch there, touch there, then I was thinking, okay, we're probably going short here. So then what we actually get is... and I didn't take this short, by the way. I didn't take this short right here. But it is nice. And what it is that you actually have a first entry short right there, second entry short. Now, this is basically a double bottom, right? This is like not really like a leg. This is like kind of like a double bottom. So in a way, it's really like one leg, first entry, and then this is the second entry short. So this is a visual second entry short, but it's also a first entry, second entry, lower high after the second entry. Now, this is one of those ones where it has moved too far, right? It has moved 2.5 points, but because this is like a double bottom, you could treat it like its own second entry. Now, the reason it's still a yellow is because of it's already moved pretty far. You have enough room to get to the lows with one tick, right? So if it makes a new low there, then you're going to be fine, but you're not guaranteed. So it is a little risky. Now, if you took that, you do get a runner though. So nice trade. I think somebody in the community, I think it was Peter, said that he got like 12 ticks or something there, right? Like 3 points. Let me see. I'll look. I think he said he got 3 points on that one. Where was it? Yeah, 3 points. He got 3 points. So he got a nice trade there. I didn't take that one, but nice trade. So then it comes down, and I was just checking the premium section of Discord, what you get with the school membership. So then this comes down. We kind of get a close outside here in a new low of this separate channel. But it's not the most convincing one. So I think we're probably still going lower. I know someone's going to ask about this, and I think that actually someone did. I know I got asked about this in my paid community. This trade here, and here, you know what? Maybe I can pull up the chart. Give me 1 second here. Give me 1 second. Someone else marked up their chart. I'll pull it up. This was from somebody in the paid community. So this is their chart. And I know that I think they were asking me about some of these setups. I figure I'll just go over it real quick. Hopefully they don't mind. But I'll just go over it real quick. So let me just see. So they did mark, I think they marked that one as a second entry short. Oh yeah, the bad signal bar one. That's where that lower high was. So a lot of these were decent. The breakout pullback was, they did mark the breakout pullback here, which I do see as a reasonable setup. Basically, if you looked at this like almost like a micro range, there is kind of a breakout pullback there. Those are not the most reliable setups, to be honest. Yeah, you can take them sometimes. I think that you're better off to see if you get like another test of it and it gives you like a second entry breakout pullback. Anyway, they marked this one as a visual second entry. So this was from, again, this is from someone in my paid community. That's why I'm going over it. And they looked at this as like a pullback first entry, pullback second entry. It probably looks small on the screen. Let me zoom in. They looked at this as like a first entry, second entry, a visual right there. I would say that one is, you could argue for that maybe as like a visual second entry. This is technically the new low, but it does look like two legs back to the EMA. What I mean by that is it kind of looks like leg one, leg two. That makes sense. And this isn't really a convincing close outside, so you're probably still going to get a new low. So you could argue for that one. You could argue for this to be like a visual one. I just think that you're better off to just wait for a better setup than to take that. But I do think that it's reasonable. There's a second entry short up here that they marked, and yes, that is above the EMA. It ends up being a failure. That's another one. You got this close outside new low, and then you do bust out of here. Now you're in this this looks like a close outside new high, but this looks like a channel of its own at this point. I think it's risky. You do have room to the channel, so it's a little counter trend to take this. It is risky, but it's only a 5-tick bar. I think that you can argue for this, but I don't think it's the best setup. I didn't take it. I don't think it's the best setup here. They also did take the second entry long, and that's where their chart ends right here. They did take that one on a scalp. So, and there is a good second entry long here. So basically, now you have this up channel, confirms it basically here, get another touch here, then it closes outside and gives you a first entry pullback, second entry long right off the EMA. Basically a perfect two-legged correction. You're expecting a new high here. You can see it's pretty much perfect. And you got room back to this level here, which is, I'm drawing this as kind of like a key area right now. You wouldn't have known it was a key area yet, but you got room there. That's a good one. The higher low is not good enough, so you can't take that. But then from this low, you actually get a first entry, second entry short, and a failed breakout. That's a decent one. It's only a 5-tick bar again, so really low risk, and it's probably going to fail. The lower high is nice, but it doesn't. It closes above the level, so you don't want to short below that because you might be getting a breakout pullback that actually goes higher here. So you got to be careful with that. Now there is then it does break back in and go lower, and then you do get this second lower high, which is like a failed second entry long, and it forms the way you want it to. It's kind of below the EMA, so you have like a first entry, second entry long failure. Pretty bearish, and you got plenty of room to these lows. And you would have been thinking we might try to go down there. It's reasonable. It's a big bar, I think. 13 ticks compared to the other ones. But it's there. Oh, I just saw a comment. This second entry long, that's not an inside bar. That's not an inside bar. What do you mean? That's, so I see your question, Cube, but it's not an inside bar. It breaks below. Look, that ticks below. I think it ticks either, it might even tick two, it's either 1 or 2 ticks. Yeah, you got to tick, it ticks below and then reverses. That's not an inside bar. So, I don't know what you mean. It's not, yeah, it's not an inside bar at all. That's its own, that's the bottom of the swing, and it's a really bullish bar. So, probably going to trap all these shorts. Everybody who tried to short this lower high is probably going to get trapped. They're all FOMOing to try to go short here, and they're all trapped. So, that's a nice one, I think. All right, so then, yeah, it's not an inside bar. The inside bar is like, here, I'll show you an inside bar. Let me find an inside bar. This is an inside bar right here, kind of. Because it has an equal low to this one, but the high is lower, so that's kind of an inside bar. Or like this one. They have an equal high, but this bar is pretty much all inside this bar. A true inside bar, though, is, let me find a true inside bar. A true inside bar, I've probably passed one already, to be honest with you. This is a true inside bar right here. Because, like, this low and high are both, this bar is within the low and the high, and it doesn't even make an equal low or high to the bar next to it. That's a true inside bar. All right. Anyway, so we run down, we get a little overshoot of this channel right here, and then it reverses aggressively. Doesn't make a new low, just reverses. There's a first entry short there. You don't want to take that. So it comes up, first entry short. Pulls back here, so it's technically a second entry short below this, but that's a failure. And that's not where you're looking for a failure. And it's also too low to take a short there anyway. You don't want to mess with that. Then this thing just runs higher. And so from here, there's actually a first entry, second entry long, but no signal bar. Higher low is not good. So there's really no setups in this. You just have to wait. I did draw this like possible channel here earlier on in the stream. It looks like it might not really even be in play. I think we're kind of just in this bigger range down here. And we're probably still going to try to test the lows. So let's see if we can draw anything that fits. Here, let's shrink this channel. And then we will draw to see if we have something like this possibly in play. Like we're in sort of a downtrend. It's not the best looking trend. It's kind of wide, but there it is. So I'm looking at this as kind of a, there's kind of a first entry, second entry long there, but you don't want to take that. This is really like a double top. None of this is good. This is all choppy. From here, it does look like we're going to form a first entry short. It's kind of a hidden second entry short, to be honest, because it's like a pullback. And this is kind of like a hidden first entry, and this would actually be like a hidden second entry short. This bar. It's all like trying to stretch to find a trade, though. You're right in the middle of the range. Back to that original measured move. Middle of the range here. Just kind of a dicey zone. I think you got to be patient here and wait for something good. I just don't see anything that great here. You kind of have some micro little things happening too. Like there might be a little micro up channel in here. That's probably a close outside of it, if you, depending on how you draw it. So let's see. So if you do get one below this, maybe a lower high would be a nice little second entry there. Can I go over why? Yeah, can I go over why no signal bar in the up channel at the start? Talking about over here? Is this what you mean? This area right here? Like the higher low area? Is that what you're talking about? Let me know and then I'll try to answer that. Everybody here, while I wait to see what he says, he or she, smash up the likes. We only got 5 likes. Let's see if we can get some more. Our goal is still 40 likes. But man, we have not been hitting it lately. I don't know what the deal is. Okay, yeah. That's like right here. Okay, so basically, if you're trying to go long here, you basically have a first entry. It's kind of like a second entry short failure, but failures you want to form on the other side of the EMA, and we don't have a new low made. This isn't the strongest overshoot, and even after the overshoot, we might still get a new low. We really might still get one. So I'm still thinking we might come down here. I'm not really thinking I want to take a long. But even so, this already made a new high and a close outside. So then you get a pullback. If you look at this like a first entry pullback, second entry long is above this bar. This is an inside bar right here. So it's not a good signal bar because it's an inside bar. So even though this bar the inside bar is bullish, your signal bar is this one. When it breaks above this one, the second entry long triggers, but it's all inside bars. So because of that, you need a higher low if you're really going to take a long there. And the higher low is right here, and that's not a good signal bar either. Yeah. It's not closing. Good signal bars to the long side close in the upper 1/3. Good signal bars in the short side close in the lower 1/3. This is like all the stuff that I teach in the course. So there's a lot of nuance to it all. So here comes that lower high. There's a lower high. Now here's the thing. This is a nice looking setup because you actually have a first entry, and then below this is going to be a second entry short on a lower high. The only problem is we're kind of in this little range, and you're basically on the midline. So if you do take this, it's a little dicey. Like, it's not the strongest trend I've ever seen. It's probably going to work, but it's definitely dicey there. This is what I'm talking about right here. Talking about this one. Let's see if it breaks below here. And we'll measure that bar. This would be how far you need it to go to get your scalp if it breaks below that. Might not even actually trigger. Well, I actually don't think it's going to trigger. So it looks like it's not going to trigger. I'll put the arrow back if it does trigger. This is why stop orders are nice. You have your stop order one tick below the bar, and if it doesn't trigger, you just cancel the order. But it looks like it might not, because there's not that many ticks left in the bar. I mean, it could reverse aggressively here, but unlikely, it looks like to me. So we'll see. And if it closes as like kind of like an inside bar, then this is going to be too congested anyway. Yeah, no setup there. So that's why stop orders are so good. And it looks like it's a kind of a close outside. Maybe, I mean, this is probably, you could probably argue that that's still in play, depending on how this next bar goes. You got to wait and see how this next bar goes to really confirm that. Because it all still fits, but we'll see. But now there's no second entry there yet. If this makes an equal high here, then this can become a new signal bar. Or a higher high, which it did. So this could become a new signal bar. But again, now it's... I mean, it's like, do you really want to stretch your channel to like, you know... It starts to get ridiculous at a certain point to stretch your channels too much. That still kind of fits, but that just starts to look a little chopped to me. So I don't like that. Overall, the way I had it drawn originally was like this. That is going to be a second entry short, possibly. But it's pretty congested right now. Starts to be a little dicey for me. But if this forms a really nice one, then there might still be a second entry short opportunity there. But this is just so, like, tight right here. I just think it's dangerous to take a trade now after that. Especially with the inside bar there. A couple of these are kind of dojis. Probably going to work, but might not be the best setup. All right, if you got questions, go ahead and drop them in the chat. All right, I'm going to stretch the channel very slightly just to see if it still fits like that. Just to see. because that really wasn't a convincing close outside. And that is a second entry short. It's tight, though. I mean, it is tight to take a trade there. Like, you can kind of see if you measure this. You know, those lows right there are like 3 ticks away, and we kept bouncing right there. Maybe 4 ticks away. It probably works, but it's just, I don't know. That's not an ideal setup. That's not an ideal setup. I'll mark it as a yellow, I guess, but I just think there's better trades today. There's better trades today. So I just don't think that you really need to be taking that. That's my opinion. You see what I'm saying? And look at this. Like, you can see it's not even, yeah, it might even fail. It ends up being enough for a scalp, but you see what's happening here. It's just congested. Yeah, look at that. It's probably going to fail. Still would have worked for a scalp, but this is what I mean. Like, you're kind of taking a congestion trade there. You might still get a lower high here, but that's definitely a close outside now. There's no way to like make this fit now. That's a close outside. My original channel was drawn like this. So now we definitely have a close outside. There's really no arguing that. So now we just got to wait and see how this plays out. But there you go. There you go. Let's see if it makes an equal high, which would be treated like a lower high. But still, I wouldn't be taking it. Again, there's better setups today. Just better setups. All right. I'm gonna shoot a note over to somebody. I gotta here. Give me one second, everybody. My hold on, my browser. I got something weird going on. Give me 1 second. What the heck? My bad, everybody. Give me 1 sec. All right. Okay. All right. So I was talking about this before. If you want information on everything I do, it's all in here. This is the paid community right here. All right. So you can check it out. It's only $127 a month. And it gives you everything, right? Gives you everything. It's my full course. There's weekly live coaching calls that we do that are like webinar style. There's daily support, live chart updates throughout the session, and in here and in the premium Discord that you get access to. You get access to the Ninja Trader toolkit and indicators that I built that make price action trading a lot easier. And there's all these things. So you can read about all of it there. You can watch the 5-minute video about it if you want to learn more. You can see in here when you join, there's a bunch of stuff going on. And like this was today's link where I post all the chart updates throughout the session and have some comments about it. It always starts pre-market. And yeah, there's a whole bunch of stuff in here. Classroom, courses, everything. The full calendar that has our schedule. Our last weekly call was yesterday. So that was recorded and posted already in there. It actually was a really good one. So I added it to the actual course, which is now it's part of this course. It's always in here too, but now it's in both. And so there's like tons of content in here because these weekly Zoom calls are all recorded and they go all the way back to like November of last year. So there's almost a year of them. And then these, the price action course, that has, I update this regularly. So I'm always adding new things to it as there's more opportunities. So it's kind of like an evolving, ongoing learning. And so I think that you'll really like it. So check it out. And if you have questions, go ahead and ask me about it. All right. Give me 1 second. I got to check something real quick. I'll be right back. All right, I'm back. Sorry about that. It looks like we are going to that low. There was a lower high. I think I might have been not paying attention when it happened, but there is a lower high there. So that's a little bit of a setup. The problem, of course, is that it did run pretty far, but not that far. It only went basically a scalp. So you could argue for that one. I would still mark this as a yellow just because this is so like sideways and congested here. I just don't think it's ideal to take a trade into congestion like that. But there is a lower high after a second entry short there, so I got to mark it even though it's not ideal, right? All right. The most ideal setups today were the second entry long right here, the higher low after the second entry long there, and the second entry short up here. That's why it's a red arrow, and that's why these ones are green arrows for the longs. The yellow arrows are all like a little bit less than ideal. Okay, so we are trying to make that new low. We'll see what happens here. See if we get 2 legs down to a new low here. Yeah, and thanks, Jarvis. I appreciate that, fam. Appreciate that. Yeah, Jarvis has been a member for a bit. Alright, if you got questions, go ahead and drop them in the chat. If you haven't liked the stream yet, please hit that like button. We're only at 12 likes. We've been slacking on the likes lately. And just so everyone knows, I've been doing this different, newer feature that I started testing this week where I only allow ads at points where I'm not like going over something so it doesn't interrupt. Like if I'm going to take a sip of my tea or if I got to walk away for a second. I'm just kind of using those as like little ad breaks. So hopefully that is much better experience because before I was letting YouTube do it automatically. And it was just, man, it was just tough. Like with when YouTube was doing it, they would just interrupt the stream at random points for random people. So they'd have to rewind. And I just think it's a bad user experience. So I'm trying to improve on that. Cube, I don't know what that means. Gotta give freedom the algo. I don't know. I don't know what that means, but hey. Freedom algo is definitely the algorithm for having freedom in your life. That's what this is. You know, there is the freedom algo toolkit that I built for NinjaTrader. That's what you're seeing on the chart here with these multiple ATRs, the take profit target, these numbers that are below the bars, like all that stuff. Yeah, that's for sure, Cube. I like that. Gotta help Freedom Algo with the YouTube algo. And we are listening to my music as always. You just look up my name, Nick Bannock, you'll find my handpan music. I actually recorded some stuff with a friend of mine the other night, so we might have some collaborations coming out soon. We'll see. Haven't been recording as much music, but I went to a friend's house. So we'll see what happens. He makes like kind of like chill electronic music. So we're gonna see how we can collab and have some handpan with electronic music going on. It could be pretty sweet. So we'll see how it comes out. It's just a first go at it. It's probably gonna take a few weeks for him to actually work on it. And then I think what we're gonna do is I'll record some even better stuff for him in the future too. And Cube, I don't think I've seen your name in my stream before. Are you new to the channel? Let me know. Thanks for being active today in the chat, by the way. Thanks for being active. I appreciate it. So, first question, are you new to the channel? Second question, is this your first time on my stream or one of your first times? Third question, how long have you been learning the price action strategy? And how's it been going? So that's the questions. This is chop in here. This is choppy. Hard to trade this. It's hard to trade this. You have inconsistent lows, inconsistent highs. I mean, there's kind of a range here that I drew, but it just doesn't seem like the best thing here. Here, let me remove that blue line and just drag this over to there. You can just see it. It's just pretty inconsistent looking. Oh, sweet, man. Glad that you found us. I mean, not sweet that you've been floundering, but glad that you found us. Glad that you found me 2 days ago. Oh, cool. You watched that course. Yeah, that thing's almost 4 hours long, so that's cool. Glad that you like it. It takes a while to really learn it. It takes a lot of patience. And there's no substitute for the screen time that it requires of watching the live market and charting it live. So it does take time. It will take it's a long commitment, but it'll be good for you. So really glad that you found me. Glad that you watched the course. That's awesome. I appreciate you. So you already know, like, that's actual sections from my paid course. I mean, really the main details though are in the paid course, obviously. Like all the nuance. Like yesterday I did a full like 1 hour like webinar for the community that's now I actually added it to the course. So yesterday I did a new video Zoom call that I added to the course, and it's basically all about the nuance of price action. And stuff like that is just not going to be on YouTube, but it is in the course. Yeah, definitely, Jarvis. It does take time and patience. And Cube, that's cool, man. That's cool. It'll be good to have you here. Yeah, I agree with you. That's same with me. The high win rate scalping just works better, I think, psychologically for a lot of people, especially like, you know, if you're really into in and out type of stuff. Like, I don't like to sit in a trade and watch my P&L go up and down for a long time. I'd rather be boom, take that profit, and then I can watch my P&L climb with a runner. Glad. Hey, Jarvis, that's all really awesome feedback. I appreciate that. It's really good feedback. And that's why I do this. You know, I do this because it took me a long time to learn how to become a price action trader and to be effective at it. It took me a long time. To be honest, like in a way, like a little bit embarrassingly long, right? Like it took me a long time, but that's because I was trying to like learn by like reading like the Al Brooks books. I was trying to like learn from like the Pat's trading manual and all that stuff. And it's just hard to learn that way. I was trying to trade it. I'd watch like chart reviews. Like I would do all this stuff. I would scour YouTube for different price action traders, see if they had a better and easier take for me to understand. And it just took a long time for it to click. And then eventually when it did, I realized that there were some things that just could have made it a lot faster. There's just some different ways to explain it, different ways to look at the market, different ways to understand the ATR and how to go about the scalp targets in a way that's more mechanical. And so when I realized all that, I was like, you know what? I gotta build this. I gotta build this out and make like a course, make everything that I can to help people on their way. And so that's kind of why I created all this, just to basically create what I wish I would have had for myself, essentially. Yeah, for sure, Cube. That's the best thing to do. I don't think that anybody should just jump right in. You know, I like, this would be considered probably, you know, bad marketing on my part. I don't think anybody should just jump right in to my paid community before they really understand what's going on. I mean, like, I have so many resources that you can check out for free to start to see if you're even going to like my style. I think that you already took the right approach of watching the 4-hour course. Doing that on that 4-hour course on YouTube is there for that particular reason, to show how I am, right? Like how I communicate, if you're even going to like learning from me, because that's really important too. Like, you're not going to go through a whole course if you don't like the guy. So I wanted to make it so that like there's sort of almost like a like the YouTube itself is like a trial of what you get, right? So that's what I think. I think it's good to hang out on my streams, ask some questions, watch some videos, and do all that before you actually sign up. That way you really are more informed about what you're doing, you know? And honestly, it's low risk anyway, though, because you can join for a month, and if you don't like it, you can cancel. It's like really no big deal. It's not a huge amount of money or anything for what's all in there. And but I did it like that because I want people to feel confident when they go into it. I didn't want to like charge, a ton of money for the standalone course and then charge a separate fee for membership and all that. I wanted it all to be one thing so that people can really try it out. So that's how I do it. Yeah, I think it's smart the way that you're approaching it, though, Cube. Yeah, you're probably right. There's not really anything embarrassing about learning it. It takes a long time, like it does. It takes a long time. And and the reality is people don't like to hear this, but I'm just going to say it anyway because it's important. Trading is not easy. It's not easy at all. It can be simple. You can keep your trading simple, but it's never easy because you're constantly in a battle against yourself. It's very difficult. And the thing is, like, it's one of the most difficult careers to be successful at, in my opinion. And the reason is because you're constantly in a battle with yourself and your emotions, and it all goes against our human nature, like the way it feels when you're in trades, all that stuff. A lot of our psyche's working against us. Our own brain is working against us because it's built, we're wired for pain resistance. And being in a trade is painful in a lot of ways. And so it's hard. But what I'll also say is that, hold on, let me take a sip of this. My mouth is so dry. All right, my bad. What I'll also say is that if you think about some of the hardest careers out there, like I don't know what would be ranked as the hardest careers out there. Here, let me actually look. I'm gonna do a quick look. Hold on. I'm gonna pull up my browser real fast and do a quick look. Okay. Let me see. Rank of hardest careers in the world. Let's see. Here, let's do careers to get into. Physics, mathematics. I mean, I don't know if I buy some of this. Biomedical engineering, architecture, they're saying, piloting. So there's a lot of different ones in here. Different science professions, surgeons. So it looks like yeah, there's a lot of stuff in there. And basically, let me bring my screen back up. Think about those careers. Think about what it takes to become an attorney or a surgeon or whatever. You don't just start doing it, right? You don't just start doing it. You don't just become a surgeon. There's a huge barrier to entry. And the barrier to entry is a ton of school, residency, approvals, all these things to become a surgeon or an attorney. You got to go through college, you got to go through law school, you got to pass the bar exam, you got to get a job. Like, there's a lot involved to actually become a practicing attorney. There's a lot of fields like that. Trading, to become a trader, you can literally just go, anybody can go and open a brokerage account and start trading. There's no barrier to entry for something that is extremely difficult. And that's a problem in our industry in some ways. It's amazing because it means that it's a way to achieve financial freedom, but it realistically, you should think of it like becoming a lawyer or becoming a surgeon. It's so hard to do. It takes so much time. If you were going to commit to becoming, let's say let's just use the attorney, a lawyer. You know that you're probably committing to at least, and let's say you haven't done college yet. You know you're committing to at least 8 years, right? Before you can even be a lawyer. Like, it's a long process. Now, I'm not saying that trading, you have to be doing it for 8 years to be profitable, but I'm just saying that it's a massive amount of dedication. So you should treat it as such, and you should have an expectation that there's going to be many months where you're just trading on demo accounts and all that sort of stuff, before you're really ready to risk actual real money. So that's an important thing to consider. There we go. There's the new low. All right, let me get to these comments because I just went on that long tirade. So give me a second. Yeah, for sure, Jarvis. For sure. On that. I'm watching it go up and down. You started moving your runner to break even plus 1 tick. Yeah, I mean, those are good. The only problem is you get stopped out more on those, I think. Like, it's not bad to move it to break even plus 1. It's safer in terms of securing your profit, paying your commissions. But you will get more runners if you just move it to break even. And then what I like to do is move it to break even. And then once it moves like far enough in my favor, like let's say it moves like 12 ticks. Then maybe I move it to like break even plus 4, right? So now I'm actually got my runner sitting at where my scalp would have been or something, like stuff like that. It just depends. It depends on the actual move that's happening and how it's forming and stuff. Like there's a lot of nuance to it, to be honest with you. Just test it and your mileage may vary. Yeah, exactly, Cube. Yeah, exactly. Good morning, Insane Football. Good to have you here. Yep. Jarvis, I would say that would probably rank as just a like it sucks job, right? There's a lot of jobs that just it sucks. I met someone when I was traveling once who did that same job, and he told me he's just like, man, it sucks. Or like I knew this one guy and he worked in a factory that made dog bones, and basically he's like he worked overnights. It was like something ridiculous, like a 12-hour shift overnight. And he did it like, I think it was like a 12-hour shift overnight, and you do it like 3 days a week or something like that. And basically, he's like, you're sitting at a machine for 12 hours. You're just a machinist at a machine, and it stinks because it smells like dog bones. Like he's like, it stinks, and he's like, it's boring. You have to he's like, it's boring. It's not, he said it wasn't super easy or anything. It was mostly just hard because you got to stay awake. You got to be on your guard because it's somewhat dangerous, the machines that they're operating and all that sort of stuff. So being a machinist, I think, is pretty terrible for a lot of people. I wouldn't say it's hard in terms of getting into it, but hard to do, right? And what I'm trying to get at is like, some of the careers that have really high payoff, like attorney, surgeon, stuff like that, pilot, they're really hard to actually get into. And it takes a lot of training to do it. And that's kind of how trading is. Oh, nice. That's great, Cube. That's great. Yeah, I think that's good. And if you can work remote, man, it's so much better with this too. All right, so we made a new low. So all downtrends have played out now. This is where I drew that low from before. We're kind of testing the area right now. Let me expand this out real quick. Something like that. There is a higher low there. I think it's dangerous to take all the way down here. I think you got to wait. First entry short. This might form a second entry short that could fail, but it's not where we're really trying to get a failure. So we just got to wait. Give me 1 second. I just got to reply to something real quick. All right, my bad. I had to reply to something. That's a second entry short, but this is really kind of like a double bottom. So it's kind of like a first entry. It's not really one that I'd be taking. And I'm not looking to take shorts here right after we just made that new low. It is a close outside and everything, but I just don't think it's worth it. I think it's dangerous. Did we ever make that? It looks like we came down to that original measured move area. So now you got to start to wonder. Let's zoom out. What do we got going on here? You start to wonder. I didn't consider drawing a trend from up here. Nah, that seems ridiculous. I didn't even draw this here, but we can just draw it. Something like there. Goes outside. But we are still going lower, so now we just got to wait and see. I don't think you can really draw one like that. No. Okay. I think that's pretty much what we got. Broke through the bottom of this range too. Now we might form a new downtrend here. It's possible that we could form a new one. It wouldn't surprise me, but we'll see. All right, let me just see. Sorry, I missed a couple of comments. My bad. The Drain, good to see you. You said you took the higher low. Oh, I see. You took this higher low. I mean, I think you could. It's just a little dangerous with how bearish this all was. And there's not exactly a close outside here. I mean, depends on if you consider this a close outside new low and then that's a higher low. You see, like the problem is if you just drag this over very, very slightly like this, it still fits. And that doesn't look like a close outside new low has been made yet. So I don't think I would take that. I think that's dangerous. I think this is the close outside new low, and then this is the second leg to a new low. So now I would be thinking a little bit more bullish. But again, I'd want to see probably a trend that starts. And failures, Jarvis, are difficult to learn. I have a bunch of stuff in the course about them. They are difficult to learn. They take longer to learn than everything else. Because like a lot of times, if you take a failure, you're the one getting trapped. So you got to be careful with them. We'll see if we form a up channel here. Apologize. My son just needed something, so I had to respond to him real quick. All right. All right. Any other questions, comments? Oh, wait. What happened to my music? Hold on. What happened to my music? Oh. Put on a different. Oh, with. Okay, there we go. Any other questions, comments, anything at all? Let me know. Let me know. This is debatable close outside of this little up channel. First entry short. But you just made a new low. So it's dangerous. Dangerous to go short. You got to pause after a new low like that. Especially if we start making higher lows. Start considering. Consider the wider channel if it forms. We don't know if it's going to. Consider it if it forms. We got to be patient here. This level doesn't seem to be getting respected very well that we had. I'm not really seeing any sort of pattern that would tell me that this is like a wider down channel. You draw from this high, you don't really, yeah, it's not really looking like it. Kind of chopped right now. It's a little chopped. All right, let's see here. I think I'm probably going to wrap up here in a minute. Starting to print a little slow. The ATR is going up, so that's nice. Some bigger bars in there. Any final questions before we part ways? Let me know. Lower high. Cube, this is part of it's custom it's actually custom tools that I built. It's the Freedom Algo tools for NinjaTrader that I built, and they are included with your Freedom Algo school membership. So if you join later on you'll get access to these. There's actually this is part of this. That's the custom toolbar, the custom ATRs, the take profit target with settings. These numbers that are under the bars, all this stuff, it's all included in the membership. Yeah. There's other stuff in there too that I don't even have on the chart. Like there's like a second entry like leg counter and stuff that that I go over in there. So here's the lower high, second entry short forming. I just think it's dicey right here. Again, I'm not taking this. Yes, that is a second entry short. Yes, that is a lower high, second entry short. But we just made that new low. This could easily fail here. It's just one of those ones where I don't even think this is a really yellow arrow trade here. Because it's like, you don't have like a larger channel really. It is bearish overall. I mean, unless there's some sort of like wonky looking, like I don't even want to draw it, but unless there's some sort of a wonky, here, I'll show you. Like, is it possible that we have this like sort of flat kind of wonky channel? It's possible that it's just like that, and it's like it's almost like a flat rangy type thing. But it's just, it's, even if you draw that, it's not really going to help that much. It's just not really like looking like that much. It's not a strong trend is what I'm trying to say. And so it's just dicey. Like right here, what did that go? It went enough to give you a scalp, but I just think it's dangerous. I'm not going to mark it as a good setup because I don't think it is. Because we just broke back inside, so it's not even really a breakout pullback. Yeah, Daniel, that just comes with the confidence in the strategy. It takes time to develop that. You know, it's basically the way that you get the confidence for that is you trade on a demo account in real time and you just take the setups on a demo account and you just get your brain to start recognizing the setups and take them and then study them and understand how it feels, what's going on, why, like, as you take the trades, mark them with like yellow and green and blue, or yellow, green, and red arrows and stuff of what you think they are, and then you analyze them each day. So that's the main thing. Like if you're second guessing and all that, usually what that means is that most people start trading with money too early, or they start using like a prop account when they're not ready for real money trading. And it's better to just trade with a demo account for a while and build the confidence in the strategy. Because once you have confidence in the strategy and you've shown that you can do it successfully on the demo account, then you can do it with money without all that second guessing happening. Because on a demo account, you shouldn't be like talking yourself out of the setup anyway, because you're not going to lose anything. It's just like demo trading. Now you still want to be responsible. You don't want to just take everything that you know, that barely looks like a setup. You still want to follow the strategy the way that you're supposed to, and then analyze it to make sure that you are. The key is to trade on a demo account for a long time until you've really gained the confidence that you're doing it the right way and that you're getting good results. And that's going to be different time frames for everybody. Different amounts of time. You know, it's going to be different for everyone. All right, I got to check something real fast. Okay. Okay. Let's see. Yeah, so Daniel, just try that out. Try trading on, if you're not already trading on demo, just switch to trading demo for a while as you're learning it. No reason to risk your real capital until you're really confident in the strategy. Usually, second guessing everything and all that sort of stuff and being like hesitant and all that, just it comes from a lack of confidence in the strategy itself and your ability to read the price action. And that's where the confidence, so that's the big thing. Yeah, I understand. So I think 3 weeks is probably not enough time, to be honest. I think you probably need a lot more time than that on the demo. Just like what I talked about earlier in the stream. You know, like, think about it like this. If you were training to become, let's say, a surgeon, you wouldn't train for 3 weeks and then start doing surgeries, right? You would train for a lot longer. Now, I'm not saying you have to do it for as long as it takes to become a surgeon, but I am saying like 3 weeks is a pretty short amount of time. Like if you're taking only 1 to 4 trades a day for 3 weeks, it's really not that many trades overall. Like, let's say you take 2 trades a day, 5 days a week. That's only 10 trades a week. In 3 weeks, you've only taken 30 trades. If you took 2 each of those days, it's not. Wait a second. Yeah. What? Sorry. It's not that many trades. And the market changes over time. There's different conditions. There's different types of days. Maybe you haven't had an uptrend day in those 3 weeks. And so that's your first time trading an uptrend day, for example. It's all, I think you want to do it for a while. The other thing that you can do is, there is a thing that I call the hybrid approach. once you're ready, right? Once you trade with a sim account for a while, then what you could do is you could do a hybrid approach where you only take setups on your cash account if they are like the best A+ setup, and maybe you use your demo account to scratch the itch for the less ideal setups, right? So you kind of switch between them during the day. Maybe you take only one trade on your cash account per day, but the other trades are on sim or something. There's a hybrid approach like that. Cube, I don't know. Look, here's the thing. Like, I've talked about this so much, so I'll try. I'm not going to talk about it too much, but the whole prop firm thing, I don't really like it that much. I think that they can be used effectively in theory, but like almost nobody uses them effectively. So I'm not saying that they're bad or whatever. Like, you can use them at your own discretion, but you have to be so disciplined to actually follow the rules and to actually treat it like a real account, because there's a promise of all this money with like, oh, it's no risk, it's not your own capital and all this stuff. But like, dude, they incentivize all these practices that are meant to make you blow up your account. Like, that's just how it is. They allow you to over leverage. They allow you to do all this weird stuff. And I just think, like, yes, it can be done as an effective way to bridge the gap. It can be a useful tool before using your own cash account, but they come with some risks, and they can be somewhat damaging psychologically if you're not prepared for like what's all involved with it. So, you know, it's kind of it's different for different people. It depends on your level of discipline, and everyone's level of discipline is different. So that's a hard one. It's different for everyone on how much time you should spend on sim. I think it is. It's different for everyone. And Van, I'm not sure. I'm not sure, to be honest with you. I mean, I think also all of them, you still have the promise of all this money when you're probably not quite ready for it, right? So it can create a psychological thing. It's like trading, right? Like, if you're trading with a cash account, let's say you have a $1,000 cash account. That's how much money you have. Well, you're not going to trade even probably with, like, you're definitely not going to trade with more than one ES contract on that. Otherwise, you're over leveraging, right? And like, the problem is, if you start trading on a prop firm, and they allow you to trade with 5 contracts, like you're just not even close to ready for that. That's the whole thing. And the allure is there. So that's kind of how I see that. Now, Daniel, in terms of how long should you spend on sim, it's going to be different for everyone. I think that you should do it for a while until you have a lot of confidence in the trading style. And then when you are ready to trade on a cash account, it should be at such a small level of money that it doesn't freak you out when you enter a trade every time, right? You have, like, for example, in that example I just gave of, like, let's say your trading account's $1,000. Well, then maybe you trade the MES instead of the ES, and you trade with only like 2 contracts. It's a very low risk. It's not going to, even if you take a loss, it's not going to hurt you very much, right? That's kind of what I mean. I'll be right back. Yep. Yep. I think that's pretty much the way it goes. So if you go, so Daniel, I think you're in my community. So there's a section of the course, it's in like section 2, I think, where I did a video on how to set up the MES on the ES chart so that you can still plot the 2000 tick ES chart but execute MES trades. That's a good idea for when you're getting started. So you're still looking at the ES, but you're trading the MES. That's a pretty cool thing, because when I started trading this, the MES didn't exist. So you could only trade the ES. So I've never been an MES trader, but the MES is definitely a useful tool now for newer traders. The commission is not great on it, but it's still a good way to get into it. I got the big long. No, I trade the ES. I was using it as an example though. Like if you had only $1,000 account, trading the ES would be pretty dangerous, right? Because it costs $500 to enter one contract. So you would be pretty much stretched to the limits of what you would even be able to do. So you'd really want to trade the MES if you only had like $1,000. If you have like, if you have a few thousand, then yeah, you can trade one ES contract. But you got to be careful. You really do. Like you don't want to over leverage. Like if you have like, let's say you have a $3,000 account, you don't want to risk like hundreds of dollars per trade necessarily. You want to keep it pretty chill. So I was just using it as an example of like, you don't want to stretch yourself to the limits of what's possible. On all these prop firm accounts, they'll have like a drawdown of like $2,000 or like $2,500, but they'll let you take a trade with 10 contracts. And I'm like, okay, so you can take maybe one loss, maybe two, and then you're toast, right? Like, why would they even allow you to trade with that many contracts if that's how limited the drawdown is? And the reason is because they want you to blow up your account and buy a new one. That's how they make their money. Like, that's just how it is. So I was just using it as an example. Like, you wouldn't even be able to do that. So let's just say you had a $2,000 account, right, with NinjaTrader. You wouldn't even be able to buy. I mean, it's $500 to enter a trade, and you need to have margin to cover it moving against you. So you wouldn't even be able to buy more than 3 contracts. And if you did that, you'd be really sketch, because all it needs to do is move against you a little bit for you to get liquidated. So if you had $2,000, really the maximum that you could trade with is 2 ES contracts, which is not even advisable with only 2,000 in your account. You could do it. It's just not ideal. But the point that I'm making is that, or let's say your account was $2,500. You can't trade with more than 3 contracts on that. Or you just can't do it. So, because you would get liquidated or whatever. And you probably and you shouldn't even trade with 3 if you have $2,500 in your account. But you can trade with these prop firms that have a $2,500 drawdown and take a 10 contract trade, which makes 0 sense. Because really what you should be doing if you're trading one of those prop firms is look at what the drawdown amount is and treat that as your account size. If they say it's a 100K account or a 50K account or whatever, don't even pay attention to that. Just look at what the drawdown is and say, that's my account size. And then trade as such, right? So that's the thing. Like, in reality, if your drawdown size is only 2,000, let's say, you probably should just trade the MES on that and not even the ES, to be honest. I mean, like, maybe after you build a buffer, you can switch to the ES, but that's just the way it is. Like, because your risk management is just going to be off. Like, well, not risk management, your position sizing is going to be off. That's just the way that is. That's why I always have a problem with these. And I'm not saying that they're all bad. Like, some of the stuff can be good. It can be really useful as a way to bridge the gap between a cash account, protect your capital. There are some benefits to it if done properly. I just think that most of the time it's not done properly. You see these YouTubers, entering positions. Like, I heard of a guy, I didn't see it, but someone told me that there's a guy who will enter an NQ trade on 2 different prop accounts, one going in one direction max size, the other one going in another direction max size, and we'll just open the trade and one of them will pass an evaluation account and the other one will fail. It's like, dude, that's not good risk management. That is crazy. You would never do that with real money. And you would never even want to, that's just super sketchy as a way to trade, you know? So I just think like, it's not teaching good habits. It's reinforcing bad stuff. And we all know this. The more negative stuff we do, the more we reinforce and allow for bad habits, right? Like if you love to eat junk food and you do it every day, it becomes a bad habit that's hard to break, right? If you don't take care of your body and you don't work out regularly and you don't do the hard stuff and you'd rather just like sit around and eat potato chips and that's what you do every day, you reinforce that as your way of being, right? It's the same thing with trading. If you start doing sketchy stuff with your trading, you are going to set yourself up for so much pain because you're going to reinforce all these bad habits. And a lot of these bad habits are learned from these weird prop tactic strategies. So I just think that they can be good if you actually follow the rules and treat it like a real cash account, but most people will not do that. That's all I'm trying to say. Now, if you can do that and you do treat it like a real cash account and you are responsible and diligent and smart about it, then it can be a really great bridge between a demo account and your cash account. That's my long spiel. And I hope it helps somebody and I hope it makes sense. If you disagree, let me know. If you agree, let me know. But overall, the main thing is we want to reinforce as many good habits as possible. That's why I don't think it's a good idea to take bad sim trades even. Like if you just start taking bad sim trades, you actually reinforce bad habits. So I'm not even somebody who believes that you should take every single sim trade that you think is there. Like if you look at all these yellow arrows, right? Let me zoom out. All these yellow arrows are trades that you could take. They're not the best trades in the world, but they are, some of these yellow arrow trades are still good trades that you could take. Now, if you take every single one of those every day on sim, the problem that's going to happen is some of these are not, the reason they're yellow is because they're not a sure thing a lot of the times, right? They're not really like, so the ideal is to wait for the red arrow and blue arrow, or red arrow and green arrow trades, right? Wait for those, or take some of the yellow arrow trades that are better than some of the others, because I don't really have a way of scaling it, right? Like there might be like we talk about A+ setups. Well, there's A+, A-, B+, B-. I don't have a way to scale, or like I don't have like some, like it's not like I'm going to label each one, oh, this is a C+ trade, oh, this is a B+ trade. But like if you're basically taking A+, A- to B+ setups only, even on sim, and you're still ignoring some of these like lower quality yellow arrow trades, ones like this one right here. Like this one right here. This is a second entry short that looks like it could be a close outside new high. It's far from the EMA. It's a small bar. This is like a C+ trade, right? It's not a great setup, but it's low risk because it's only 5-tick bar. So you don't care that much if you take a loss on that. You're going to have a 6-tick loss. It's not huge, right? It's not a big loss, or sorry, a 7-tick loss. Would be your loss on that. That's not a giant loss that's going to freak you out, but it's not really ideal. You don't want to necessarily reinforce the habit of always taking C+ setups either. So you got to be careful with that. You got to be careful. All right. Let me see. Okay. All right. I missed a few comments, so let me come back. Can you trade one? All right. So Cube, you asked, can you trade one ES contract on 2K drawdown, or is that really foolish? What about 6 MES? 2K drawdown. I think it depends on how big your losses are going to be, right? So, I mean, let me do this. Let me pull out a, give me 1 second. I'm going to pull up a spreadsheet so we can just look at it real quick. Okay. So I'll pull up a spreadsheet here. Let me zoom in a bunch because it's probably going to be tiny on your screen. All right. So you got $2,000, right? Let's come up with a, so this is, we'll call this, account. This will be stop loss in ticks, right? Let's say your average stop loss is 12 ticks. I don't know what it actually is, but let's say it's 12 ticks, okay? And this is going to be, you know, amount lost, right? So that's $150. Let's call this percent of account. So let me make sure I'm doing this right. Is that right? 150. No, that's wait. Whoa. Hold on a second. Hold on a second. That's some wonkified math, right? It should be I think it's 1.5%, right? Or is it no, is that right? Is it actually that high? 10% of your account would be 100. So is that really 15? No. That's great. I mean, I think that's 15% of your account, isn't it? Because if your balance was only 1,000, yeah, that's a pretty large amount of your account, right? So if you're gonna lose $150, you're gonna have this much left. 1850. It's not terrible. I was trying to do equals this divided by this, and it's telling me that it's 8%, but I think that actually might be right. I think that's right. That is 8%, right? Sorry, I was like, for some reason I was like drawing a brain fart, because I don't know why I was thinking about $300. I was thinking about 2 contracts being $300 loss. I don't know why I was thinking like that. So no, that's right. I second guessed myself. That's 7.5% of your account, right? Now, let's say that you have an 8-tick loss. That's only 5% of your account, but we don't get 8-tick stop losses very often. It's still probably too big, right? That's probably too big of a loss. Let's see what it would be with MES. So if I take these same numbers, put them here. 6 MES contracts. Well, that would be, let's say, equals 6 times 6 times where's my I mean, even 6 MES contracts might be too much. That's 4.5% of your account. 4 would probably be reasonable. That's 3% of your account. Something like that. All right. Yeah, I agree with you. The big long. Also, that's a funny name. The big long. It's probably not meant the way that it's coming off, but it's hilarious to me. But thank you for that. Appreciate that. All right, I missed a bunch of comments. I'm trying to come back now. Hold on. My bad. Yeah, my bad. I don't know why I was second guessing my math there. I don't know what the heck that was. On the fly. Kid, good to see you. 3 points is 150. Yeah, I don't know what. For some reason, I was like, I don't know why I was thinking 300 in my head. And I was like, what am I talking about? 10%, 200. Yeah, exactly. Account is 2K, not 1K. Yep. So there we go. Okay. All right. Someone else. Slamma. You do 1 contract. ES 4-point stop loss. 200. Wait. Okay. So it gives you 10 losses before an account is blown. Yeah, but that would mean that you're trading with 10% of your account on each trade, which is not really 10% of your account, right? Because if you have a loss, so by that logic, Slamma, here's the problem. After you have 1 loss, you only have $1,800 left. So now you're trading with even more than 10%, right, of your account on a trade. It's a lot of risk. Well, Cube. Yeah, that's what I have here. That's the calculation I did here. This would be 6 contracts right there, $90. So there it is. I was trying to type it in on Excel right there. You could probably see it. But the point that we're making here is that the point is, like, all right, so here's the problem. Let's say, here, let's use that example that Slamma just gave us. Let's say he has a 16 tick stop loss. That's 4 points, right? $200. That's 10% of your account. Here's the problem. When you're down $200, now you're trading with 11.11% of your account, right? Let's do the same thing, but let's say you lose the next trade. Well, now you're trading with 12.5% of your account. You see how this works? When you get down to $1,000, you're trading with 20% of your account. Like, that's not ideal. Not ideal. All right, so first entry, second entry, you're not really looking for one there. It's just kind of a choppy little action. We're finally coming up here again. So let's see what we got. It was a pretty strong sell-off. So I'm not surprised to see us coming up. I mean, this level is interesting too, because if you zoom out, we're basically at the lows of yesterday from the overnight. So I'm not surprised. We're kind of like back to that area where we closed from, what was that, the 7th? So we're back to that area. So we pretty much took back this whole move today. And now we're just kind of back to where we started at the beginning of yesterday, which is kind of funny. It happens. Yeah, like, so that's a thing. Like, there's all different conventional wisdom on that, right? And hold on, my music stopped. I forgot to put on the playlist, so it's just like playing. It just keeps stopping. So let me find another song. All right, there's that. Play. And then, yeah. So let me just pull this up on the screen one more time. So let me just do this real fast. So, like, I don't think this is a smart idea to be risking 200, like, to think of your prop account as, oh, I get 10 losses, or is like your way of trading it. Because it's really not, that's not the way you would trade it with your own cash, in my opinion. Like, would you do that? Would you deposit $2,000 onto a brokerage and just go, I'm going to risk $200 on every single trade until it goes to zero? That's just not really going to keep you sustained if you have a, like, you know, that's just not, to me, that's not a good way to go. You know, with the MES thing, there's some ways to deal with this. Like, you're not trading with as much. I think 6 might be too much. You go 5, it's more reasonable. Now, risking 1% of your account is going to be tough. Like, if you have a $2,000 account, I don't even know, is one MES contract, you could trade with, that would mean that you could only trade with one MES contract. Most people say, when I've seen in trading, you can risk between 1 to 3% of your account. Some people say you can risk a little more. I don't know. 1 to 3% tends to be a pretty reasonable approach, I think, which would mean that you can trade with 3 contracts. 3 MES contracts on a $2,000 drawdown. If you're trading with an account that has a $2,500 on it, maybe you can trade with a little more. Maybe you can trade with like 4. You know, it's pushing it, but there you go. So hopefully that all helps. And that's with a 16-tick stop loss. Now, you're not always going to have a 16-tick stop loss, so that's the other thing to consider. Like, on today's trades, if you look, this bar is 8 ticks, 7 ticks, so that's a 10-tick stop loss, 9-tick stop loss. This one would have a 15-tick stop loss. This one would have a 7. This one would have a 12. 7. 13. So as you can see, like, it varies, right? Your stop loss is going to vary depending on the signal bar. It's not always going to be 4 points. You know, the 16 tick ones are going to be less common on when the ATR is low. You're probably going to have around a 12 tick stop loss most of the time on average when you average it all out. That's kind of how that goes. All right, hopefully that was all helpful. I know I stayed way longer than I planned to because that was a good discussion, but I think that's useful. You know, I think that's a useful discussion. So definitely smash up the likes, everybody. It helps the channel out a lot. Helps us get in front of people. We were trying to go for 40 today. We got 20, so that's still decent. Haven't had a stream goal this week, I don't think. Actually, we might have had one. We might have had one on Monday. I don't remember. All right, everybody. I'm gonna jet now. I'll get the stream set up for tomorrow. So I'll see you all tomorrow. It'll be around 9:05. Maybe I'll schedule it for 9:05 since I'm always 5 minutes late. I'll just schedule it for 9:05. Well, that's another thing to consider, Jarvis. Like, this is actually an interesting point, right? Like, so let's just use this. Let's use a hypothetical. Let's say you have, let's just make up a number, $10,000 put away that you're going to use as your trading capital, right? I know, Cube. That's the thing, right? That's the thing. It's almost impossible for me to get here exactly at 9 when I drop the kids off. So maybe I'll schedule it for 9:05 and try to be on time. I'm going to do that. We'll see what happens. I'll schedule it for something funny like 9:07. How about that? But anyway, here's the thing. Let's say you have $10,000 for trading. Not talking about $10,000 to your name. I'm talking about, let's say you have a bunch of savings and all that, and you've allocated $10,000 for trading. And so you open a brokerage account and you put $1,000 on there. Well, you can risk more than 1% of $1,000 because you know that you actually have $10,000 as your account, you know, your account balance overall, even though you didn't put it all on the brokerage. So that's something to consider as well. Like, if you can consider, let's say if you risk 10% of 1,000, that's 1% of 10,000, you know, so that is like risking 1%. You see what I'm saying? So there's like some nuance there. Like, you know, everyone's setup is going to be different with what they actually have. It does look like we're forming an up channel now. There's a second entry long that just formed. That was a new high, pullback, first entry long, pullback, higher low, second entry long. But you're longing right into this previous area that we were rejecting. It's a little bit risky, not ideal, but it's there. You know, it's kind of a bearish move overall. It's just a little choppy. I think all the better setups were earlier today. It's just how it is. So I'm going to wrap up now, everybody. There might be a second entry that then carries forward here, but I just think it's a little risky here. I don't think it's worth it. Stay safe. Be careful. There's some choppy action today. So just wait till you have something really definitive. All right, everybody. I will see you all tomorrow.